There's an AI stock that's worth $12.60 today. And by the end of 2027, it could be worth $226.80. That is roughly an 18x. Now that sounds absolutely absurd, but bear with me. We're going to walk through this and simplify things a little bit. The stock we're going to be talking about today, ticker CGEH, Capstone Energy Plus. We're going to start with a problem that's really prominent in the AI space right now and why it needs to be solved ASAP, and also why there's a lot of money to be made there. Talk about the solution to that problem, simplify all the technology, the fancy technical jargon that nobody really cares about, but it's important to know, and how in God's green earth can we get to this number right here, an 18x from the time of this recording. So first things first, it doesn't really take a genius to know that AI data centers need a lot of power. And if you look at this map right here, you can see this number represents the amount of data centers that are either operational or planned to be operational in the coming years. Now, I don't know about you, but there is an alarming amount of data centers going on here. The United States alone, you have over 4,000. Europe is also starting to catch up. And if we just take a look at the United States, I mean, you can see it's just littered. It's littered with data centers that are planned or operating right now. Most of them planned, which we could debate all day if those things are actually going to be built or not. The gray represents canceled data centers. There's actually quite a few of them already. But again, we're talking about the problem here, and I think this number will suffice. Operating capacity today of 18.5 gigawatt. All right, that's a lot. That sounds like a lot of power. Planned capacity, 330 gigawatts. Yes, literally 18 times the current operating capacity that we have. What does that leave room for? What problem does that create? I'm not going to give you the whole spiel right now about the AI power thesis and how the data center build out, the speed at which these companies are demanding not only chips, memory, the Nvidias, the Microns that have already ran up to 1 trillion plus market caps, but also the power to make those chips and those things work and actually produce intelligence. I just went through that whole thesis in this video here. I encourage you to check that out as a preface to what I'm about to go through here, but we're going to simplify it anyway. Data centers need a lot of power. Yes, we know that. Well, just pull it from the grid, right? Well, the problem is those big companies called hyperscalers, your Meta, Google, Amazon, the ones pushing to build these ridiculously large data centers, they don't want to pull from the grid because electricity prices are going up for you and me, and we don't want that. So then people start rioting to get in your way of actually building the data center. It creates a whole lot of problems. You don't want to go through that, okay? The government will make rules and then it gets a little complicated. And as the price of electricity continues to increase, people only get more angry. So just expand the grid, add more capacity so these companies aren't just railing you as your electricity price skyrockets. If we just increase the capacity altogether, then the data centers can pull power, we can use whatever stuff we want in our homes, and everybody's happy. Well, the problem with that is it takes like 5 to 7 years, up to 10 years to plan, permit, and actually build out this infrastructure, which is a problem because when you're a company like Meta, Google, Amazon trying to build these massive data centers to support companies like OpenAI and Claude to get the best model possible, to unlock the unlimited demand that AI promises, you don't really want to wait 7 to 10 years because by that point there's probably already a winner. All right, so that's out of the question as well. And so the natural solution is generate power where you need it. Generate it off the grid. Don't rely on a slow, already overburdened, centralized system. Build it localized where you need it. Behind the meter, we're going to talk about that. Again, more details on behind the meter and how exactly that works in that video I mentioned. But again, basically just generating power off the grid where you need it. And so I think you get it. The world needs more power because the AI build out is happening and happening faster than any industrial revolution we've seen before. So now we're relying on those behind the meter solutions, your Bloom Energy, your GE Vernova, and potentially, hypothetically, of course, Capstone Energy. Now, Bloom Energy's already done quite well, up like 14x over the past year. GE Vernova up like 7x. And these companies are selling product like never before. Capstone, however, has literally 0 data center contracts right now. That's a big problem if we want that company to reach this 18x price target that I'm talking about. So here's the deal. I'm sure some of you, I'm not sure how big that bucket is, but some of you are going to want to learn more about the technology and what exactly the advantages are for Capstone versus Bloom Energy versus GE Vernova. What are the differences? I'm not going to waste your time with that because there's plenty of resources that goes into all the technological stuff. It can be interesting, it can be dense, but let's just simplify this. It doesn't really matter how good the technology is when you have this dynamic going on. Someone told me they'd take a powered site with no nines. What does that mean? Usually power has like 99.9999999% reliability. It's always on, right? It's never off because that would be a problem for you if, your power only worked 50% of the time. Hence why you want really high reliability when it comes to power. The point is people are so desperate for this power that they don't even care if the reliability is that good. Again, this is just a tweet. It's on X. I'm taking it at face value. This could be complete nonsense. But the point remains. Demand for power is so strong that I don't think the technology itself is that important right now. In the long term, yes, it'll probably become more of a decision factor. So I'm going to let somebody much smarter than me, the CEO of Data One, the company building out some of the biggest data center projects in the world right now, talk about why he doesn't believe in Capstone Energy's micro turbine solution. That's going to worry you. But hold on, I promise it gets better, okay?
Then micro turbines, I don't believe into them. Not at that scale. Honestly, this is way too small.
What about for smaller data centers? Because there's actually one company looking into, is it called Capstone Green Energy Holdings?
Yeah, Capstone is a great technology. The problem is, if you do 5 megawatt, 10 megawatt, maybe. But honestly, these days, I don't believe into this size of factories because right now, the efficiency of the concentration of power is so high that having anything below 100 megawatts becomes irrelevant.
All right, so that was basically the exact opposite of what we wanted to hear, that the technology is basically irrelevant because it just doesn't make sense to build out edge data centers that are like 5 to 10 megawatts up to 200 megawatts. You might as well just concentrate it all together. That's where you get the best power efficiency. That's what he's really getting at, right? Now, obviously, that has some merit. That's a very smart guy working on a massive data center project. But let's remember, if we zoom in here, I believe this is the one right here. Nebius Data 1, 100 megawatts, and number 2 right next to it, a 200 megawatt facility. So we're talking about 300 megawatts of data center capacity. There is a little bit of vested interest here. I mean, obviously they're in the midst of building out and planning these massive facilities. So for them, yes, the micro turbine solution doesn't make a whole lot of sense. If you just look elsewhere on this map, these smaller dots right here, I think this is where Capstone's wheelhouse is going to sit. No promises. I'm just an engineer who does some research. I can't give financial advice because I don't have the financial certification to do so. So this is not financial advice. Make your own damn decision. But I'm going to provide you some data and hopefully that helps you make a decision. So why, when we just had someone pretty much shoot down the idea of CGEH technology being relevant at all, why do I say there's some promise still? Well, we got to get through some very basic fundamentals that'll take us about a couple minutes here. So one, we have a big data center, right? These are the ones that you see all over the headlines. The 200 megawatts, 500 megawatts. You have a gigawatt AI data center campuses now. Okay, they're not campuses to go educate kids, all right? Campuses to generate intelligence through GPU clusters, a lot of chips. Let's just say these are gonna be, 200 megawatts and up. So these data centers are going to be massive, right? Here's your data center, here's your big chimney, here's the entrance. Beautiful. Big data center. Love it. So this guy right here, for the most part, is going to be used for training. We'll give this a T. Remember, there's really 2 parts of artificial intelligence. On one hand over here, you got training. You're going to train the model to do some specific or generalized task really well. So if you're trying to cure cancer, let's say, you're not really going to care as much about the speed of the model. Yes, obviously you want it to run and train as fast as it possibly can, but it's not detrimental to your success if it takes a little bit longer. If latency is, let's say, like a few seconds to a couple minutes, it's okay. The other part of AI is inference, actually using the model to generate a response. Now, if you're over here and you want an answer from this data center, but let's say you're, I don't know, 500 miles away, you're gonna get that chat bubble popping up for some time. And that's okay if you're asking questions about cancer research in this case. Instead of a big data center, let's remove some of these elements here. We're going to talk about edge data centers, small. Now we'll just say, to keep things simple, less than 200 megawatts. Oh, and by the way, for perspective, 1 gigawatt is about the power capacity that those big, ugly nuclear reactors have. So just for perspective of how much power we're actually talking about here. These edge data centers are going to become really important for inference. I, not T. Let's say this time you are in a car. I don't know why you'd be standing in the car, but let's say this is an FSD Tesla. Ugly picture, but bear with me, okay? This Tesla is going to make real-time decisions that impact whether you're gonna live or not. So you being closer to this source of inferencing this AI model that's going to make a decision in real time, you better be a lot closer than 500 miles. Ideally, you're right near the source. Now, obviously, that's unrealistic, but I think you get the idea. The point is, these hyperscalers aren't just building out big data centers especially designed for training. It's also for inference at the edge. Now, obviously, what we just watched from the CEO of Data One doesn't really back this because he's building a data center that is very large, 200 megawatts, 100 megawatts, 300 megawatts total. That's a lot of power. And to get the most efficiency, you're definitely going to want more than a micro turbine that can produce somewhere around like 1 megawatt. And this is the exact power capacity of Capstone's micro turbine. Connect 30 of these together and you get 30 megawatt. Simple enough. Now, yes, clearly things are really fluid in the space. There's things getting canceled constantly. There's new headlines coming out. There's new deals being made. It seems like the direction is that these data center contracts will continue to flow. And with Bloom Energy pretty much at capacity, GE Vernova pretty much at capacity, these builders are looking for any alternative they can get their hands on and hence don't really care about the 99.999% reliability. They just need power now. Another thing to consider, obviously these little 1 to 2 to 5 megawatt data center facilities, they're not going to get the big headlines. The 200, 500, 1 gigawatts worth of power are, because we like big numbers, we like to see big money, keeps the economy going, the stock market going up, everybody's happy, right? Well, if you own AI stocks, of course. So we still really haven't answered this question of how this number could make any sense if today's price is about $12.60. At least that's when I did this analysis. End of 2027, so not even that long term. How am I getting an 18x here? This right here is Capstone's biggest generator in terms of power capacity, up to 1 megawatt. Connect up to 30, you have 30 megawatts. This is what we're gonna assume is going to be their big hitter. And for your perspective today, 1 megawatt of power capacity is roughly 1 million in revenue. It can vary. It's something like 800,000 to 3 million. We'll be conservative. We'll say it's $1 million in revenue for 1 megawatt of power provided. That's just upfront to service, maintenance. That's going to cost even more. That's basically pure profit for the company doing maintenance, which will be Capstone. But we're going to keep it very simple. So Bloom Energy, in terms of technology and addressable market, is probably the best comp that we have for Capstone. So we're going to use that as a reference. Right now, Bloom Energy is sitting at a market cap of about 81 billion. They're projecting revenue anywhere between 3.4 to 3.8 billion. You could choose a million different financial indicators to get a price target, but the point is you need to choose something, and so we're going to roll with price to sales. For Bloom Energy, it's 31.1 over the last 12 months. But if we use their next 12 months to be a little bit more generous, we have a market cap of 81 billion. Annual revenue, it was like 3.4 to 3.8. So we'll just call it 3.6 billion. Divide that out, you get roughly, let's just call it 30. Make the numbers nice and easy. 30 price to sales ratio. What does Capstone sit at? Market cap of about 380 80 million when this calculation was done. Let's use the trailing 12 months. We're not going to use the future 12 months like Bloom Energy because, again, they don't even have a data center deal. So let's just look at what they're valued at right now, because they're not valued as a data center player. About 110 million. That puts us at roughly 3.5. So you can see the valuation difference in terms of price to sales ratio when you look at a company that's getting data center deals up the wazoo versus a company who has no exposure to them right now. I'm telling you right now, if they just get one data center contract, and this is not speculation, valuations and multiples increase rapidly when you get exposure to an industry that's growing like 1,000,000% per year. So obviously this is going to expand at least 7, maybe even 10. You never know where hype can go. We'll roll with the assumption that CGEH will have a 7 price to sales ratio at some point if they get a data center deal. Again, if they don't get a data center deal, this is out of the picture. Okay, so if you don't believe in the prior thesis, then click off the video right now. It's going down or it's roughly staying the same. So if their current annual revenue is about 110 million, and if we take a quick peek at what the CEO just said on an earnings call, that they're gonna have 1 gigawatt of power capacity annually. That means if Capstone can sell 25% of their capacity, 250 megawatts, if 1 megawatt's $1 million in revenue, that's $250 million in revenue. 50%, that's going to be $500 million in revenue. 100%, if they sell out of their current capacity, then yes, $1 billion in revenue. Is that super realistic? I don't know. Anything could happen nowadays. If we assume this number right here, this 1 billion times their 7 price to sales ratio, which we got down here, we have a $7 billion market cap. 380 million to 7 billion is roughly an 18x. So at the beginning of the video, obviously I'm going to give you the most absurd and aggressive target first. That gets your attention. I'm just being honest. But that's if they sell out completely of 1 gigawatts of capacity, which they don't even have right now. The plan is to get there soon. But if we've learned anything about the data center deals that are currently happening, if you get one deal like Bloom Energy did, like GE Vernova did, if you just get your foot in the door, more will come, right? It's kind of like when it rains, it pours, because everybody needs power, and it doesn't really matter how reliable or how great the technology is right now. It's about getting the capacity up and running. These are conservative numbers here. Assuming 1 billion is a little absurd, but if we just assume they sell out of 250 megawatts of capacity, which again, you could argue that's a pipe dream, but that's $250 million times 7, a conservative price to sales ratio in a hypey sector with a penny stock. I'd argue this could get much, much larger, closer to Bloom Energy. Then we're talking about a ridiculous price target. But if we assume 25% of their capacity sold out, 250 megawatts worth, which would be about $250 million of revenue, you're talking about a $1.75 billion market cap company. 380 million to 1.75 billion, still pretty good. It's going to get you almost a 5x. As we just talked about, this could happen very fast because their window is kind of closing. You need to take advantage of it. You need to take advantage of the demand right now. Like we saw from the Data One CEO, the long-term solution isn't as viable, isn't as convincing as a Bloom Energy or GE Vernova per se, because their efficiency overall is just better. GE Vernova makes like 200 megawatt generators. We're talking about 1 megawatt right now, okay? It's small. It's not going to be the best choice for some of these massive data centers that are planned all over the United States. But for edge data centers, and as that becomes more of a popular theme, as inference becomes more of a focus point, we're already seeing that. Companies are flocking to AMD and Intel to get as many CPUs as they possibly can because they know inference demand is right around the corner. It's happening right now. We should expect that these edge players will continue. And who's going to power the edge players? Well, potentially a Capstone C1000S micro turbine. So at the end of the day, the assumptions are 1, that a data center deal is coming and is imminent. 2, that once you get a data center deal, we've kind of seen from peers that it tends to result in much more confidence from other players who give you more data center deals. 3, let's be honest, it's a hypey industry right now, and it's a penny stock. So when it starts moving, it's probably going to start moving fast. And 4, you can't even buy the stock on Robinhood right now. They're listed on the OTC market exchange. Basically, a lot of investors don't even get to invest in it unless you're on platforms like SoFi and Fidelity are the ones that I know of that have it listed. They meet all the criteria that they need to meet to be listed on a stock exchange like the New York Stock Exchange, which means a lot more investment opportunity, a lot more potential hype. So again, this is not financial advice, although this right here you're seeing is an 18x opportunity. Not that I think that's super likely, but I think is possible. I think the 5x is much more feasible. I'm not a financial advisor. Make your own decisions. I hope this helps. If it did, let me know in the comments. Let me know what you think. If you think this argument's complete BS, because it definitely could be. What other players are you looking at? Let me know. Good luck. I'll see you in the next one. Bye-bye now.